Good afternoon, investors. You are now on KleverStock with me, Ainun Jaria, and I will be serving you the midday roundup with the latest market updates from this morning up until now. Kicking it off with the Bursa Malaysia updates. Bursa Malaysia opened higher on Friday with trading very much centered on key heavyweight counters. At 9:08 a.m., the FPM KLCI gained 4.12 points or 0.25% to 1,673.69 from Thursday's close of 1,669.57. The benchmark had opened 0.87 of a point higher at 1,670.44. On the broader market, gainers outpaced losers 159.96. A total of 273 counters were unchanged, 2,121 were untraded, and 24 were suspended. Turnover stood at 93.17 million shares, valued at 50.22 million ringgit. Now, APAC Securities expects investors would continue to monitor global geopolitical developments, including U.S. strategies on Venezuela and Greenland, as well as the upcoming U.S. Supreme Court ruling on President Donald Trump's tariffs, which may contribute to market volatility. It added that attention would remain on Friday's U.S. non-farm payrolls for clues on the U.S. Federal Reserve's rate cut trajectory, while mixed U.S. labor market updates, including continued low layoffs but cooling job openings, add to the cautious sentiment. The APAC Securities maintained a positive outlook on power, ancillary, and renewable energy stocks, supported by stable demand and long-term energy transition initiatives. In a note today, it said technology stocks remain constructive, driven by global demand for AI-related solutions and ongoing digitalization trends, although some profit-taking may occur following recent rallies. In periods of global uncertainty, we favor defensive sectors such as REITs. Among heavyweight stocks, Maybank jumped 10 cents to 10 ringgit and 74 cents. Public Bank advanced 2 cents to 4 ringgit and 51 cents. CIMB was 1 cent to 8 ringgit and 7 cents. TMB was 2 cents higher at 13 ringgit and 58 cents. Press Metal was flat at 7 ringgit and 8 cents, and IHH Healthcare shed 1 cent to 8 ringgit and 53 cents. On the most active list, Hanko rose 1 cent to 1 ringgit and 24 cents, Orkim back 3 cents to 1 ringgit and 12 cents. Zetrix AI and Berjaya Corp both gained half a cent each to 82 cents and 27.5 cents, while MMAG was flat at 7 cents and Next Green eased half a cent to 79.5 cents. Among top gainers, Hong Leong Bank firmed 14 cents to 22 ringgit and 78 cents. Malaysian Pacific Industries appreciated 10 cents to 32 ringgit and 50 cents. KSL went up 6 cents to 3 ringgit and 29 cents, while Alliance Bank and Itmax both put on 5 cents to 5 ringgit and 6 cents and 4 ringgit and 97 cents. Top decliners included Hong Leong Industries, which trimmed 14 cents to 16 ringgit and 52 cents. TM decreased 6 cents to 7 ringgit and 86 cents. IGM and TSA shed 4 cents each to 2 ringgit and 29 cents and 71 cents, while Hexstar and Country View slipped 3 cents each to 1 ringgit and 15 cents and 2 ringgit and 92 cents. Moving on to our local currency and foreign exchange. The ringgit opened lower against the US dollar, weighed by a firmer US dollar index DXY as global markets position ahead of tonight's US non-farm payrolls release. At 8 a.m., the local currency slid to 4.0650 or 4.0750 against the greenback, compared with yesterday's close of 4.0580 or 4.0650. IPPF's Senior Berhad Director of Investment Strategy and country economist Muhammad Siddiq Jantan said the US dollar's strength is being driven by yield support rather than risk aversion, with US Treasury yields still anchored in the 4.1 to 4.2% range, signaling a market that is pricing a controlled slowdown rather than a growth shock. He said the first full trading week of 2026 began on a strong footing, but momentum has been interrupted by a rise in geopolitical uncertainty, prompting a tactical rotation into safe haven currencies. That shift has weighed on high beta Asian forex, leaving the ringgit temporarily on the defensive despite still constructive global risk conditions. He said with the US labor dynamics now shaped by tighter immigration and slower labor supply growth, a modest payrolls print is no longer viewed as recessionary, and this explains why recent job openings and labor turnover survey jolts and ADB employment data failed to move markets materially. He added, instead, investor focus has shifted to the unemployment rate, which will be determined whether the US Federal Reserve can remain on hold. At the opening, the ringgit traded mostly lower against a basket of major currencies. It was down versus the Japanese yen to 2.5907 or 2.5972 and decreased against the British pound to 5.4613 or 5.4748. However, it strengthened vis-a-vis the euro to 4.7386 or 4.7502. The local note also traded lower against its ASEAN peers. The ringgit inched down vis-a-vis the Indonesian rupiah to 241.9, 242.6 and eased against Singapore dollar to 3.1627 or 3.1710. It also declined versus the Thai baht to 12.9265 or 12.9645 and fell against the Philippine peso to 6.86 or 6.89. Now for some local economic news. The Economic Census 2026 BE 2026, currently in its first phase, focuses on the informal sector, including small and micro-scale enterprises and the rapidly growing online businesses, according to the Department of Statistics Malaysia, DOSM. Chief Statistician Datuk Seri Dr. Muhammad Uzair Mahidin said the informal sector refers to online business activities and conventional business activities such as mobile traders that do not have a permanent structure. He said that the BE 2026 for the informal sector will be carried out in detail to obtain comprehensive coverage of economic activities and conducted at the small unconstructed level. He said large enterprises have proper records and the like. For the informal sector, we need to sit down with them to understand the pattern of their activities and what they produce. This allows the data we obtain to be turned into national statistical data that can help them, as well as assist agencies in determining how to empower this sector based on complete and holistic data. According to Muhammad Uzair, the census approach is used to ensure DOSM obtains full coverage from one area to another in collecting detailed economic data. He added, we go down to the ground and we also use close relationships with local communities, including hawker associations, traders, as well as village heads or community leaders, which enables us to obtain good cooperation. BE 2026 is being implemented in 3 phases. The first phase from January 5 to February 28 involving the informal and micro sectors. The second phase from March 1st to June 30th, micro, small and medium enterprises. And the third phase from June 1st to October 31st, 2026 involving medium and large enterprises. Now, a total of 1.34 million business entities nationwide, covering informal enterprises, micro businesses, small and medium enterprises, as well as large companies, will be involved in BE 2026. Muhammad Uzair also stressed that the BE 2026 is the best opportunity for the government to reassess national economic data and planning assistance for micro and small traders, including those in the informal sector. He explained that the data collected through BE 2026 will subsequently serve as a reference for ministries and relevant agencies in assisting these groups. Continuing with more economic news update. Malaysia boosted natural gas-fired power generation and slashed reliance on coal in December. Grid operator data analyzed by Reuters shows as rising production bolstered local supply and helped expand liquefied natural gas exports. Now, gas-fired power generation accounted for most of a nearly 5% rise in electricity supplied to Peninsular Malaysia in December, making up for a 4.3% decline in coal-fired output. Real-time data from Malaysia's grid system operator GSO showed. Reuters analyzes that data to break it into a monthly output figures that are not released publicly by the GSO. The Southeast Asian nation of 35 million, however, expects natural gas to overtake coal as its main source of power only in the next decade. As gas use increases, Malaysia, now the number 5 global LNG exporter, also expects to significantly boost its imports to the super chilled fuel in 4 to 5 years. Pratik Pandey, head of Asia Pacific Oil and Gas Research at consultancy Restart Energy, said the reliance on gas for power generation is expected to increase gradually, with a more meaningful shift occurring only after 2030. Malaysia's Energy Commissioning, which regulates the grid operator, and the GSO did not immediately respond to requests for comment on the Reuters analysis of the data. The gas use in Peninsular Malaysia, which accounts for about 80% of national electricity demand, rose 28.4% in December on an annual basis, the second straight monthly increase the analysis of the GSO data showed. That followed an 11.8% rise in Malaysia's natural gas output in the quarter through September from a year earlier, the fastest in 3 years according to the government statistics. The rise in gas output also helped to pull down Malaysia's 2025 LNG imports, which fell 29% to 2.26 million metric tons, the lowest in 4 years, while exports rose to a record of 28.25 million tons, data from analytics firm Kepler showed. Now, Malaysia's gas production, though, is expected to plateau or start declining towards the end of this decade, analysts said, just as the country likely enters a period of steady growth in gas-fired generation. Power consumption in Peninsular Malaysia has been rising in recent years due to a surge in demand from energy-guzzling data centers, pushing it to crank up reliance on coal-fired power. Coal share in Peninsular Malaysia's annual power generation rose to 58.6% in 2025 from 56.5% in 2024. The GSO data analysed by Reuters showed while the share of gas fell to 33.1% from 36.4% in 2024 as output fell nearly 10% in the year through November. A 12.6% increase in solar power generation also helped a marginal rise in its annual share to 2.4% from 2.1% in 2024. Solar output is crucial for keeping power generation costs low in Malaysia as it pivots away from coal and uses more gas. We'll now take a short break, but don't go away. We will return shortly with more local corporate news developments in Malaysia. Welcome back to the Midday Roundup. Let's continue with more corporate news developments in Malaysia. Interest in small and mid-cap stocks on Bursa Malaysia is brewing as investors rotate towards smaller counters amid muted performance in the benchmark FPM KLCI. Since the start of the year, the FPM Mid 70 and FPM Small Cap have emerged as the only two indices on the main market to sustain an upward trend, each recording gains of more than 2%. At the market close, the FPM Mid-70 had risen 2.77% year-to-date, while the FPM Small Cap gained 2.21%. Now, in contrast, the FPM KLCI has remained largely flat at 1,669.57, while the FPM Emas and FPM Top 100 have risen by less than 1%. Since January 2nd, the first trading day of 2026, three FPM Mid-70 stocks have stood out, posting double-digit gains. IGM Corp Berhad rose 18.18%, lifting its market capitalization to 9.96 billion ringgit, while the UEM Sunrise Berhad gained 21.1%, valuing the company at 3.34 billion ringgit. Mahsing Group Berhad added 13.27%, bringing its market capitalization to 2.84 billion ringgit. Now, in the small cap space, recently listed Insights Analytics Berhad surged nearly 54%, or 61 cent to 1 ringgit and 20 cent year to date. Listed on the ACE market on October 27, 2025, the company has seen its market capitalization more than quadruple to 946 million ringgit, from just shy of 200 million ringgit at its initial public offering price of 36 cents. The FPM Mid-70 tracks the 70 medium-sized companies ranked below FPM KLCI constituents by market capitalization, while the FPM Small Cap comprises companies within the FPM Emas, excluding the top 100 by market value. The rally in the two indices marks a reversal from 2025, when both the FPM Mid-70 and FPM Small Cap lagged the broader market. Market observers said investor interest in smaller counters has been building after a prolonged period of underperformance. RHP Research said in a note that last month, both indices significantly underperformed the FPM KLCI in 2025, despite a brief resurgence in mid-cap stocks between September and November. That rebound, however, proved short-lived as investors rotated back into defensive names amid broad-based profit-taking. Up next, we have some business news update. Sunway Berhad's unit, Sunway Treasury Sdn Berhad, has proposed the establishment of a Sukuk Wakala program with a nominal value of up to 10 billion ringgit. In a filing with Bursa Malaysia, the group said proceeds raised from the program will be used for Sharia-compliant purposes, including capital expenditure, investments, general corporate and working capital requirements. The funds may also be used to refinance existing Sharia-compliant or conventional borrowings, including the redemption of outstanding bonds or sukuk, as well as to defray fees and expenses related to the program. In addition, the proceeds may be channeled as intercompany advances to Sunway and its subsidiaries, including jointly controlled entities and associated companies. Sunway said the program will have a perpetual tenure, with each Sukuk Wakala issued under the program to carry a tenure of more than 1 year to be determined prior to each issuance. The program allows for the issuance of both rated and unrated Sukuk Wakala. Sunway said the first issuance under the program will be irrevocably and unconditionally guaranteed by a corporate guarantee provided by the group. HSBC Amanah Malaysia Berhad has been appointed as a principal advisor, lead arranger, lead manager and Sharia advisor for the program. And finally, wrapping up, we have major corporate developments and deals across Malaysia. Sunway Berhad unit, Sunway Treasury Sdn Berhad, has proposed a Sukuk Wakala program of up to 10 billion ringgit to fund working capital and refinancing of borrowings. Capital A Berhad has clarified that Bursa Malaysia's decision not to approve its request for an extension to complete the implementation of its distribution of Air Asia X Berhad shares to its shareholders will not materially affect the group's ongoing corporate exercises. A Kinerja Advancement Berhad-led consortium has formalized an equipment supply agreement for the planned 1.5 gigawatt combined cycle gas turbine power plant project in Perlis. Orkim Berhad has secured a marine transportation job from petrol station operator Posted Petroleum Marketing Sdn Berhad, better known as BH Petrol. And last but not least, T7 Global Berhad has secured a work order from Petronas Karigali Sdn Berhad for the provision of integrated well plug and abandonment, as well as project management team services for the Zuhal East well. Now that's a wrap for Midday Roundup with me, Ainun Jariel on KleverStock. Thank you for choosing us investors. Stay tuned for our upcoming live stream programs coming soon.